The YouTube, good morning. It's Tuesday morning. It's 11 a.m. It's 1 hour past the 10 a.m. push. And I want to talk to you a little bit about my trades this morning. Let me find my Euro Jappy here. We did trade Euro Jappy 4-hour wick fill, continuation of momentum. Still not done yet. Euro USD still not done yet. Let's talk about it. Let's talk about it. All right. Now, what did we have? What did we have? Okay, so of course, number one, identifying structure. So we have higher highs and higher lows, right? Because price continues. So we broke structure kind of below a little bit, but as you can see, this huge rejection made this 2-1 con from here to go into the high side. Broke structure, higher high, new higher low. Broke this structure, so make a new higher high, makes a red pullback, a new higher low, and it retested. And then you can see that's 9:15 if you see on the bottom of the screen. Boom, 9:30, 9:45, right for 10 a.m. Right for 10 a.m. with a 4-hour continuation of momentum wick fill. As you can see, price breaking above structure with the wick to go fill. And I mean, look left. There's really nowhere else for price to go besides up. You got to go to the daily to even see where the next zones are at. Because realistically, if we're going to keep going bull, we're going to go into this whole area. Because it's pretty dang strong. Look how strong. Look at these dailies. Look, same setup. But on the daily, look, close above resistance. Boom. Launch. In between zones. Boom. We reach the next zone. Now we close above again and in between zone. It was just a bullish all from last week and going into this week. Like, I wish I looked at it. These are textbook trades. Like, straight up textbook trades. As simple as you can get. Trading 4-hour and daily momentum. Look at how the 4-hour closed above resistance with the wick to go fill, and we're in between zones. So there you go. Euro USD again, same thing. Look at how the hour was just setting up. It was just really just not done until we really probably want to reach the top of this. Even another 10 pips from now. With the same structure. Higher high, higher low. Higher high, higher low. Higher highs, higher lows. We broke resistance. We retested resistance. Resistance turned support. Boom, boom, potential cross. Now we may just have consolidation leading up to either sparking the downtrend still, because we're still pretty much like in a downtrend. Maybe this is changing a bit. Let's look at the daily. Maybe the daily was just coming down for some liquidity. We might go to the high side. I wonder how the daily candle will close. It'd be very interesting. But anyway, just very simply, I just wanted to talk about, those continuations. As you can see, look at how we reject supply so much, right? And so look what happens. We're in between zones. Oops. So we closed here, right? But we're still are in between the zones. Look at the next zone area is. Because see, we're here, and we're pretty much in between. So then you get your handy-dandy pip counter out. And boom, 18 pips to the next destination. This was just for one 4-hour wick fill. That's how much it went up. Just for one. In between the zones. That's how far the next zone was. That's how far she went on Euro USD. Look, right here. Here's the pullback right here. Boom, 17 pips. There's all your money right there. Huge money. Same thing on Euro Jappy. Except Euro Jappy has nothing moving the market, so it could move a little bit slower, of course, at this time. But look, we had the structure, right? We kept breaking above, and then we just kept making higher highs and higher lows, going into the new 4-hour continuation of momentum. We still went up 13 pips. Boom. Can we still go? Absolutely. Are we still going up? Probably. Same thing happened on Euro USD. We already talked about it. But this is why I break up my trading plan around the 4-hour time frames, because when you just look at a chart, you can just look at a chart and you can just say, okay, well, what happened? Boom. There's your support, right? And there is your typical resistance because, well, I guess we could make it on the top of this. We might as well make it on the top of this since this is how the 6 a.m. candle closed. So here's the most recent support. Here's your resistance, just like this with this whole wick range. So all you got to do is look at this and say, okay, well, we're in between the zone. We haven't hit the next zone following price action. Do we have higher highs and higher lows? Yes, for bullish structure. So we're continuing the momentum going bull. There it is. Look at Euro Jappy. Let's do the same thing. We'll delete everything. 4-hour time frame only. And this is much easier, of course. This is the most recent support, but then we broke above resistance. Well, now you'd say, well, we're going here. Oh, wait, there's nothing, so we can't see where we're going. So you got to go to the freaking daily. Top of this, this is the most realistic. The top of this, but then we have this whole ranges that we can go to if we're going to continue going bull city. In between zones off that daily. But you can just tell by the 4-hour, just because we broke above resistance, boom, there's your scalp. Scalp to swing. What if we go reach these highs? It's 100 pips away. Scalp to swing following 4-hour time frame and daily momentum. That's how I do it. I look at a 4-hour, I draw my very basic support and resistance, and I see if we're in between zones. It's about as easy as it gets. Look at how textbook Euro USD was. In between zones. Price closed here on the 4-hour, and then we're in between zones now. We have not hit the next zone. The next zone would have been in this whole wick range area. But that's how you scalp. Well, I mean, that's how I scalp. And then you can scalp the swing, because then you can just run your stop loss in profit. What if it keeps going? What if price comes up here? You just got 50 pips on a scalp. I mean, a scalp to a swing. And then you guys know, I'll just bring up my trading plan a little bit more. You guys already know my trading plans. Most of you do, who follow me at least. I mean, you don't have it, but you've seen it. Me posted here. You follow the plan. You follow your plan, whatever your plan is. And my plan is always changing, always getting better, and always improving. You have to keep on improving your plan because things work, some things don't work. Were we able, here we go, trade if you can clearly identify structure. Were we able to identify structure on EJ? Yes. We had higher highs and higher lows. We can identify bullish structure, same thing on EU. Can we identify structure? Yes. Higher highs, higher lows. We plotted out our zones. Yes. Support and resistance. Support and resistance. You can clearly see which direction momentum is going. And this is, we trade if we have these things. Yes, we can clearly see which direction trend is going on EJ. Why? Because we broke above structure. We're above the resistance. So now we're going to the next structure. We're going to the next resistance now. We may even reject a little. I wouldn't doubt it. But look how strong that was. We just want to go up to the high side. Look at EU. Same thing. Look how strong it was. And now we're in between zones. We rejected and we had higher highs and higher lows. So there is our structure. Currency meter is just a bonus. Currency meter is just a bonus. So EJ, the euro gained more strength against the Japanese yen. EU, the euro is stronger than the US dollar eventually. So, I mean, it just kind of helps, right? Because the euro is stronger, so it's going to be pushing in the direction of that currency. And then, of course, your daily routines, whatever you got to do. So we followed the plan and we executed, and this is how we caught our trade. So I just wanted to walk you guys through my thought process and how I trade, what I look for. You can definitely see we're probably not done until we hit the zone. That's another 20 pips away. Euro USD probably too. I mean, we're in this, but that was the scalp. This is just following momentum. This is a very textbook. This is about as easy as it gets. Straight up. Yeah, cat, can you stop meowing right now? Chill, Winston. broke above structure. Why would we be going down? We are so strong with higher highs and higher lows all the way. So I'm just going to put up here. I took a really big loss yesterday. That's why I haven't been posting. I had to snap out of it. This is your only tip. Follow your trading plans. If you don't have a plan, get with your mentor, make one. If you don't have a mentor, find one. If you don't need a mentor, great, make a trading plan. Make what you know to do and what not to do. We even have your Forex time zone converter in case you guys don't know what times. And then you can revert into my group and we have all the times to check in whatever time frame you're in. So like we went over here and we converted it for all the different time zones for people don't know, which is not hard. All you got to do is look at the freaking 4-hour candle. Like, how hard can that be? It's not rocket science. All you have to do is change your time zone at the bottom of TradingView. So whatever time zone you're in, right? So there's your time zones. Well, we have them here too, just in case you don't know how to do that. But anyways, just make a trading plan, guys. Make your trading plan. Follow your trading plan. Make rules. Choose your trades wisely. You have to follow rules. This is what we do. This is basically my bread and butter. Just this right here. This is my bread and butter. That's all I really wanted to share, though. I didn't really want to go into too much detail about anything else because it's very textbook. This is a very textbook setup. Just continuation of momentum. If you break up your trading plan into just following those 4-hour time frames, it's going to help you guys out a lot. Even here, look, we broke above support, but we had a huge liquidity grab. This was during NFP week, of course. 7, 8. What's the date today? Today's the 10th, so 2 days ago. Maybe this was actually Sunday. It may have been Sunday. Today's Tuesday. This may have been Sunday, or this may have been... Wait, is it 1800? Yeah, that's Sunday then. Yeah, Casita, yeah. But anyways, look, huge liquidity grab. Then we finally closed above resistance again. So where are we going? I mean, we're just going to the next zones. Look, we went into this whole wick range area. Breaking structure, higher time frames. When price breaks structure, it's even more confident. But then the way that I gauge it is depending on, of course, what price looked like previously. So as you can see, like look at how price rejected. Then we had a strong candle, so then you follow the momentum. So it always matters on what price did right before. Right? Like look what price did right before. Just huge rejection. Boom. Going to the next zone. So like yesterday, I took shorts right here. I was up. Let me show you. I took a really big loss. I was up 15 pips nearly. Actually, no. I take that back. I got in a little late. I was up 7 pips right here. I got in a little late, and then price reversed on me. Price hit my stop loss, and all we did was make a lower high, or a higher high, lower low, lower high, 2-1 confirm on the 4-hour time frame to just continue momentum. It just wasn't ready to go at the time that I thought it was ready. And I took a really big loss, and I committed to it. And then I didn't look at the charts the rest of the day because I was pissed off. Price wasn't ready. All I had to do was wait a little bit. Oh, maybe it's not ready yet. You can wait. Boom, boom, 4 hours. Okay, there's another lower high. You know, even if in the whole Nikkei time, if you didn't have confirmation, all you have to do is wait. So if you go to 15-minute time frame, you can probably see right here, 1800. Now we're making lower lows and lower highs, and all the way through London. Look, here's London. Boom. So what I anticipated price doing didn't happen for 8 hours. Oops, 666. I don't like that. So what I anticipated price to do here, going from here to here, I anticipated price going down to the next zone right now. It took another 8 hours. So price doesn't always have to act right away. And I suffered that yesterday. And I stacked a little bit too hard. And I attached my investor account to my master account. And I just went too heavy on margin. And I took a really big loss. And it crapped me out the rest of the day. And we had beautiful trades all the rest of the day. Like look at yesterday, USD Jappy. Look at the daily. Like it could not have been more textbook than this right here. Literally. So this is what happens if you commit to something, right? If you commit to something and it goes the opposite way, it'll crap you out the rest of the day if you take a loss. It could. That's what it did to me. Because look how the daily ended up closing right here. Wait, this is not the daily. This is the... There we go. That looks like the daily, right? So, of course, we have the support. And then, of course, we've got this whole resistance. This one, and then, of course, going up here. So, look where this closed. Look how strong it was. Just the daily. All I had to do was wait, right? If I just waited till the daily candle opened, that was it. Even just the daily, then boom, look how much continuation of momentum that's had. Just off the daily. But I took a loss and I crapped myself out. And then look, so I missed the big move. Like, you only need one of these a week, guys. Take one of these a week. Put heavy margin on it. Pay for your whole month's rent, your whole month's bills, whatever. Just following higher time frame. Again, here. Look, you go full margin here. Heavy margin, even after catching just 14 pips, whatever your account size, let's just see what it looks like. Like, let's say you just had $1,000 in your account. Okay, so you got $1,000, and let's say you put, and your leveraging is 1 to 500, and let's say you put 10 entries at, let's say 0.10, just 0.10. No, let's say, can you even do 0.2? Can you do 0.2 on 1,000? Yeah, you can. Right? You get 10 entries at 0.2, so that's $2 a pip. And then you caught 13 pips each. So each entry, you're doing $2 a pip times 13. Now that's times 10. So this is what it equivalates to. Each entry becomes $26 because you caught 13 pips at 0.2, right? So then you multiply that by 10 entries. So for this sake, this scalp here, $260 on 10 entries at 0.2. So let's increase it a little bit more. Let's go to, of course, we have 1,000, and let's say that we put on a 1,000, 1 to 500, you could put, I think, 5 1.0. Let's say you put 2 1.0 entries. I guess that's the same. It wouldn't have mattered because if you put a 1.0, that's $10 a pip. So if you're catching 13 pips, that's $130 each. But if you put 10 of, I don't think you can put 10 now. You can't put 10. You exceed your margin way too much. But even if you put 5, entries, you put 5 entries at 1.0, and you caught 13 each. That's 130 times 5. 620, or how much is that? Let me do my calculator times. Yeah, 650. So this could have been 650 going heavier margin. 5 entries. 5 entries only at 1.0. So then you just caught $650 on just this one push, only waiting for a continuation of momentum. So you just made basically 65% account growth. Because it's almost 100, almost from 1,000 to 2,000. And then you just replicate it. Pull all your money out. Do it again. Do it again. And if you just wait for those higher time frames, that's all you got to do. That's the whole point of this, is just to show you guys. Just wait for those higher time frames to confirm. Look at here. Look, same exact setup. Look, the daily closed basically right on resistance. Look how strong it is, though. Boom! Continuation. Look at the next day. Boom! And then the next day. Every day. Look. Look at that UJ just perfect. You catch one of these. So this one went 50 pips, right? 50 pips. So let's do the same math. You got 1,000. You do 5 entries at 1.00. That's $10 a pip. $10 a pip. You caught 50. Scalp the swing, right? Maybe just run stop loss and profit. So you catch $10 times 50 pips, and you just opened up 5 entries. That's 5. So this is 50 pips. You catch $500 a position. Yo, cat, stop. So you multiply that by 5, you caught $2,500 off of one daily continuation of momentum in between zones. Because look, realistically, this is where your pip count would have been. Okay, from here, basically to end this, but maybe let's say to the top, that would have been 27 pips. But where did she go? She went to the top of here, right? Straight up, right to the top. That was 51 pips away. So you get your handy dandy pip count out, and you just say, okay, well, this is to the next zone. You guys can literally calculate how much money you want to make trading higher time frame momentum because you just are in between zones. So you can bring it. You just brought $1,000 to $2,500. That's 250% account growth. One trade. Scalp the swing, and that's not even including what if you add more entries in between. What if you add more entries in between? It's very possible. Very possible. But when you trade those higher time frames, you just increase your win-loss ratio because you're trading around high probability. It's high probability. And you combine that with market opens, market structure, etc. Then you gotta of course, understand how the market moves. You want to know higher highs, higher lows. You want to be paying attention to all that stuff still. Because anything could happen in between. You got to be aware of what news is coming out that week. So there's lots and lots and lots of stuff to focus on and to think about. But at the end of the day, when you trade around high probability times, which is higher time frames, you can really increase your trading strategy and win-loss ratio. So that's what I got for you guys. Of course, if you're new to my YouTube, you can follow me on my Instagram, The Wolf of FX, my Facebook, my name. And then, of course, my, I guess that's pretty much it because you're already on my YouTube, right? I'm a little out of it today. Sorry, guys. Anyway, that's what I got for you. I'll see you on the next one.